Introducing X-Credi LP staking from industry-leading RWA loan collateralization platform Credify. Earn 10% cashback in USDT after 90 days, with more rewards coming soon for X-Credi holders. Visit v2.credify.finance to.
Good afternoon, everyone. BC Richfield here, coming to you live from a very sunny yet slightly cold London today. It's just gone 1 minute past midday, making it just gone 1 minute past 1100 UTC. A really big shout out to everybody joining the stream today live, as well as everybody that is watching this on catch up. Also, would like to start the show off by giving a very special mention to our partners over at BitGet, who sponsor the show, and without that sponsorship wouldn't allow me and us to bring so much free content to you all. So really, really big shout out for them. Love the time we got to spend together over in Singapore. It's amazing when you get the opportunity, and not, at any level, if you get the opportunity to go to these, if you get the opportunity to go to these exhibitions, if you get these opportunities to go to these shows, I'd highly recommend Token 2049. It was just a real industry leader, but there's other really good shows as well. Go out there, connect with these people, really get to understand them, what their challenges are, what they're trying to do. And, BitGet for me were just so impressive how they're very customer focused, always focusing on fees, user experience, and the way that they can make this industry better. So big shout out to them. If you're interested to trade with us over at our team there, you can get all kinds of sign up bonuses. You can find all that down in the description. Another big shout out as well for the trading team and also for our members. These are just a few examples of members that have just been absolutely printing in the last month. We've been profitable every month since I've been here, which is 3 years, maybe approaching 4 years now, right? And can't speak highly enough. Look, I know I don't do a lot of this promotion, right? I never want these streams to be about putting these things in your face, but I'm so very proud of this team. Some of them are some of my closest friends over the years, and just they're doing just such an amazing job. So interested in any of that, you can find all the stuff in the description. Let's not mess about. Let's get ourselves into some charts. Good morning, Erica, NP, my friends. Nick, how are you doing, buddy? Bernd as well. Meeting Sam, great to see you here. Sebster, Julian as well, mate. How have you been? It has been a while. Recognize the name, and certainly the profile picture always makes me think you're having a little wumble about the beautiful British North. Now, don't get me wrong. Britain's not really in my favorite books at the moment for a number of political reasons and the way the country's misrun, but as a country in itself, it really, really is stunning. So anyway, before I digress any more, big shout out to you all. Welcome to the show. We are going to have our Monday focus today on Bitcoin. Let me just turn these session breaks off. So something that I wanted to say is, I put a post out last night. I do the Sunday Bitcoin report for the members over at the Bird Nest, and then I always try and share some of that as well. I also did a short update video yesterday too. And kind of a big focus of this was really looking at the 4 hour, right? Because we've got a really key support resistance level here at 60,238 flat. Excuse me, we had a really nice reaction down here. By the way, a lot of people kind of saying to me, and especially some of the trading team, we have a big special mention for Just Pit trading tank as well, who really have just been going through the wall with their calls this month. Some of them are up 500-600+% on individual calls, let alone several thousand% overall as a team. But quite a lot of members asking about, buying and selling at these different levels. Trader Mum Joe, how are you doing? Dean Hone, Joe C, hello, mate. So a lot of people asking, okay, well, how do you have conviction to buy at these levels, etc.? Well, I won't do one on it now, but we have lots of education material that's available, and a lot of it is available for free, which you can find some really, really great infographics and stuff, for example, over at the website. That's theburbnest.com. Let me pop it in here for you. Burb with a B. You get yourself over there, loads of really, really cool infographics and stuff like that. You can also access the economic calendar. You can look at our in-house screeners, which tell us which cryptocurrencies are hot, which ones not so much, but also breaks it down into 3 actionable time frames. So you can look at the weekly, you can look at the daily, you can look at the 4 hour, and you can work out, okay, what are the high time frames? What are driving the high time frames? One of the things I love to do on there, in fact, let me get this up for you quickly before we start the session, because This has been really, really helpful. So as an intraday trader, you would probably think that I get like the least help from this, right? Now, let me show you very quickly before we go on. Bearing in mind, you get access to all of this for free, guys. So it's all about, I'm a big advocate of paying for education, right? Doesn't mean you have to, nor does it mean that you're in a position that you can afford to. I've done it with my education. I did it with my trading. And we obviously do that over at the Bird Nest as well. And there's other groups out there that do it exceptionally well. I know the industry in itself is still a little bit opaque, but the very best companies, and I really do include ourselves in this, are trying to bring a lot more transparency to that. All right. But make the most of your free resources, right? Before you commit to anything like that. And this is on the website here, the Birb Nest, BIRB nest.com. Now, this crypto screener, very, very handy. All right. So look, we can see here weekly, daily, 4-hour time frames. Okay, you get information like the VWAP, 24-hour trading volume as well, weekly performance, change, current price. But I really, really like these. But look how long, not all of these, SHIB, Doge, TAO, SUI, WIF, Sol, right? Pepe. Now, all of these things, Nero as well. I've seen that on a lot of people's radars recently, okay? Now, all of these, the reason we've had such good exposure, or part of the reason we've had such good exposure to these tokens is because of this, because you can look on these scales, right? Now, let me see if I can find you a good example. So, okay, CATI, C-A-T-I, really interested in this at the moment. Why? We've seen a big pump on this, right? We're currently down a little bit. Now, what that tells me is if the weekly and the daily are both aligning bullish, but the 4-hour is currently bearish, maybe this is the 4-hour corrective move that then allows us to position ourselves for more upside. We can then take a look at what Bitcoin is doing. We see that's green across the board. Then we understand we can apply some very simple technical analysis to that, work out good kind of buying levels. And we obviously want Bitcoin to be strong, because if Bitcoin is strong, then what that does is that helps really pump the rest of crypto. Now, what else kind of plays into that? And by the way, just on this quickly, you've got that available here with tools. You've got our breadth charts on there as well, which gives you all the information of how many, or the percentage of the coins above the 200-day, the 20-day, and the 50-day simple moving averages, right? It just helps give you a little snapshot to say, okay, well, where are we at the moment? Obviously, the more here over the 200-day, that shows the longer term time frames that we're looking at. So how many of those are really kind of gearing up? And we've seen a slow but steady increase in this, as we can see over here. Now, we can obviously see on the 20-day, we've had this really nice spike as some of these alts and everything have been catching up as well. Ozzy, how are you doing, mate? Yeah, I spent very, very much the evening for you, right? But this is what I like to do with this, right? I like to look in here, find out which ones of these are there. And then I like to see the strength coming in the 50-day as well. That tells me that the longer term strength is meeting up with that kind of intermediary strength. Then we look for the resurgence here on the 20-day, find those outliers, those strong coins with good teams, if you're applying a fundamental element to it as well. Obviously, we provide that at the Bird Nest too. But yeah, just really, really helpful tools. You can get the crypto heat maps as well, tells you what's kind of going on. Everything here a little bit neutral at the moment, but as you kind of zoom into these, you can see what assets are looking hot and not. And then as well, you can go into the stock heat map too, right? Gives you an idea here. You can set it by what you want. On this one, for example, we're using the S&P 500. You can set it to the NASDAQ. You can set it to other indices and indexes as well. This gives me a little snapshot of the market's appetite for risk, all right? Looking at this kind of element of, okay, what's the larger market looking at? Is it looking for that risk bid? Is it looking at technology stocks, or is the money kind of having that safer flight towards the dollar, towards yield, bonds, for example? So that leads us on quite naturally now, and you do have an economic calendar on here too. But I know I always share my one that I've got over here at Forex Factory. So I have all my filters and bits and pieces, something we're actually going to integrate into the one here at the Bird Nest. So just to give you a little look at this, you can see you have all your key news coming in here. All right. Now, and obviously you scroll back into here as well, but let me share with you the Forex Factory one, because this is the one that I share with you guys normally. Do like to be consistent. Jesse, hello, mate. Yeah, up or down, love that. Always the big question, right? So as we can see in here, I now want to overlay what is the market doing? Very, very easy. Zach, by the way, good morning, mate. Sorry if I missed you. what's the overall market doing? Very, very easy to live in this kind of microcosm with crypto sometimes, right? Very exciting, lots of amazing people, lots of very interesting projects. But these markets still rule the world from an element of how free or how willing that money is to back the risk bid. Okay, so you're typically in a risk off or a risk on environment. Risk on environment, you see money coming into crypto. You first see it typically, it floods into the indices, the NASDAQ, S&P 500, the technology backed stockpiles, because they're slightly higher risk but higher reward. You then see that kind of filter down typically into crypto. So if we see, which we'll cover shortly on the charts, if we're seeing a very strong dollar, for example, then that doesn't always paint a great picture for risk assets. We can then look and see what bonds and yields are doing as well. And then also we really, really important that we have a view on this, which is our red folder news. So what are we looking for on here? Well, all I've done is just filter this down. Now my focus is on the US markets, okay? And we can see that we got a pretty clear run through till Wednesday when we have the FOMC meeting minutes. Now, for any of you that are familiar or aren't familiar with this, Fed Chairman Jerome Powell and also other members as well of the FOMC will speak based on, or justification and questioning based around why they've made certain decisions that they've made. Okay, like for example the 50 basis point cut that put this huge flux into risk markets. Then the worry came up about the destabilization of the economy and a push closer towards a recession. So what they do to quell that, is that right? Quell, whatever they do to calm that fear, right, is typically in the tone of how they speak. So you will hear, for example, that last week I think it was Fed Chair Bowman as well, and then we had Powell speak as well, and there was quite a hawkish tone, right? You hear that dovish or hawkish. Dovish means bullish, basically. Hawkish means bearish. It's the tone in which they're speaking. Now, if they want to calm the markets down, then they will say things like came out last week, which was, we probably won't see those kind of cuts again this year, or we'll need to revise how many more cuts we're going to make this year, putting that pessimism into the market, putting that kind of doubt into the market. Then what happens is your major players then think, okay, we've made money on the way up here on the risk bid. It's time to consolidate, time to hedge, right? Let's move some of that money out of the risk markets. Let's move them into something safer. Now, bonds, you're basically just backing, you're buying government debt. So you get a lower percentage return for it, but it's very, very safe. That's the same with the dollar, basically, the worldwide currency. But, that's why we look at those different things, which is what we're going to look at. But just to finish the rundown on this, we've got FOMC meeting minutes. That's right at the end of the day, European time here, okay, on Wednesday. Then on Thursday, we've got a really big day, right? We've got core CPI month on month, CPI month on month, CPI year on year, and unemployment claims, okay? Now, when you're looking at something like this, you see forecast, you see previous, that gives you an indication of what they're thinking. Unemployment claims, for example, they missed a bit last time, was higher than expected for the non-farm. Employment change was up as well, showing that there's more jobs being created outside of that sector. It is pretty much exactly what it says on the tin in terms of non-farm payroll. You're looking for job creators outside of the agricultural sector. Now, when we look at this, right, we can see previously we had 225,000 out. They'd actually predicted less than that, right? So that was a higher number. So now they're thinking that that number is going to come down. I'd imagine they've taken into account the jobs data, the non-farm data, to say, look, the jobs are out there. We got a good feeling, or we're positive that some of those jobs will be filled, and that will bring unemployment down. That coming down, as well as these figures being quite calm, no real kind of outliers, could just mean that it supports the risk bid and things continue to go up. However, if these come in wildly off and unemployment claims are up again, we could see that corrective move lower. Then on Friday, we close out the week here with core PPI month on month and PPI month on month as well. So with all that done and wrapped up in 15 minutes, which is normally quicker than I'm kind of jabbering on for with that at the beginning. But, I joke about that. It's very, very important, in my opinion, certainly, that we have that more macro view on the market, or macro is probably not the right term, the broader view, right? To see what traditional markets are up to see what the risk appetite is out there as well. It can just give us a little bit of help on that front as well. Craigie boy, hello mate, great to see you. So where does that leave us? Well, quite simply, I'm going to let me just zoom out. I will give the kind of daily look on this as well. Now, something that was quite interesting here, right, let me just Yeah, let me hide these for a moment because we can always add these back in, right? What's interesting here is that we're drawing up on a 4-hour scale and also on a daily scale towards this inefficiency, towards this gap. Now, something I really did want to see here, we didn't quite get it, unfortunately. But again, weekend price action, actually decent. We had that real consolidation on Saturday. Sunday saw that pump, as the market started to liven up, getting ready for the beginning of the week. But what we can clearly see here is that we didn't quite close above this. Would have loved to have seen a daily close above that. We would have got that inversion right now. When we see these inversions, let me find you another example. They're often an early sign of correction. Okay, so this is just simply a bearish gap, that we expect, like this bearish gap here did. Just to give you an example, let me just do that in red so you get the context. Bearish gap is the gap between this, the first candle, and the third candle here. So you see that wick and this here, or lack of wick, and the body leaves this gap. That's an well done, Harvey. Do you know what, mate? I'm so sorry. I do this all the time when I'm sharing the bloody news. Here we go. Right, so let's see if you've got that here. Yeah, no problem, mate. No, my fault, Craig. I need Erica here a lot of the time to remind me for these things. So hopefully you guys have caught up with that now. Apologies, left you hanging on the news. But same principle here, right? So what I'm talking about is this gap here, which is a bearish gap, continues to suppress price on a daily scale. Okay, so we had that nice expansion into it. What I wanted to see was this inverted, meaning that this candle closed above it here. Yeah, so we got that bullish close above. If we get that as a sign of strength, meaning that this area couldn't, basically you expect the sellers to be here. Yeah, well, when they're not in here and we close above it, it's a sign of strength. So we expect price to seek liquidity higher. Now, we didn't get that, so that remains a bearish gap. We can see really, really prosperous start and price getting sucked right back down into here, kind of retracing what we had happen over Asia. Now, I was just giving this example, obviously, before you very kindly made me realize I had the wrong screen up, which was this. This is another example of an inversion. Now, remember, this isn't inverted yet. This one was. You see this close above it here. Look how price comes back, retests this area, also feeds into this bullish gap. And it was a very early indication that price was then getting ready to reverse from this move down. Now, we've obviously shifted market structure a little bit when we've kind of taken out this high, but overall, we're still holding bullish structure here. We've reacted beautifully at this support level at 62.38. And now what we're saying is, okay, we now want to see what's drawing price higher. So that's why really my focus on here, and let me just kind of get rid of these, and I'm going to bring those other bits back onto the screen for you. That's why my focus here actually has been very much on the 4-hour, which is what I was sharing last night with members in a slightly more detailed Bitcoin report where we cover the weekly, the daily, and the 4-hour. But I was sharing this in the form of a little video because price has been drawing up beautifully into this 4-hour gap. Now, the play was, as I said at the weekend, right, we got these down close candles here. I want to see price close above this area. This is the top of the body of these adjoining candles, because this here is the order block that I'm interested in. Okay. So I just draw it as a black line. I don't really like too much stuff on my screen, but you'll see these as blue sometimes as well. Look what happens. We have that big move. Now, when I say a strong close, this is often this is always what I'm talking about. Talking about a big bodied candle. Yeah, you don't want to see too many. You don't want to see too much of a long upside wick on this, right? So look at what we got here. Decent body candle, but look at the wick, the way price got forced down. The bodies tell us what price achieved. The wicks tell us what it attempted to achieve, right? So in this case, tried to make a move, I would imagine, to this high here, but actually the sell pressure was too great. People closing out positions, taking profit, but also people taking the other side of that bid because we're within this gap. Now, with this one, you can see you just had a really big, strong body, or with this big bodied candle, right? Or this one, these ones are even better. When you see these large pin bar candles or that long downside wick, that body at the top shows you that momentum that you can see as they start to cluster here at this key support level, and then price runs. Now, this gray box down here is the daily gap. Okay, so just to show you that here as well, which is a gap that we didn't quite retest yet. All right, let me just make that completely accurate. So the idea was, look, if we rejected at that here, moving back to the 4-hour now, yeah, Hassan, hello, mate. If we fail this area here, if we see a rejection, then, or fail to close above this, then my thought process is that price is probably coming down to reprice lower, and that daily gap as well as that swing low are the most likely targets. However, we got the expansion out. We set this bullish gap here, and this is how we start to look at how we build confluence. I do this in green so it really stands out. But look, large expansion sets the order block because we closed above it. You also have displacement here, right? So you get this strong move up again. It leaves this gap. It shows you that the buying pressure was high here. When we set that, look how price dips in to rebalance this gap. The buyers are still there, so we get progress. So now what we're doing is we're saying, okay, we're in this 4-hour gap here, but actually we've rebalanced this now. So a gap rebalancing is where we kind of come up, fill it with the wick, but the body fails to close above it. So now it's a little bit of uncertainty as to whether this is completely rejected price here, but we're holding bullish structure. So we want to focus, right? We want to focus on this side of the buy curve. Yeah. So that side. Yeah. Less than this side, which is the sell side. Now, the sell side, we can see we've made these inefficiencies. These are the things that the market is drawing higher towards, these gaps and these highs. You basically have key liquidity pools resting above old highs, below old lows, and then these decisions, or think of it like this is like a decision-making area. Apologies, just take a quick sip of tea. So within here, we're saying, okay, look, we're in a bearish gap. What do we want to do? Let's see how price reacts. We're already long from lower down. Price is drawn up into here. Now we're saying to ourselves, okay, well, where's our next piece of confluence? Well, quite simply, it's here. This is the next H4 bullish gap that actually exists within a bearish gap here. So as long as this holds, and in 36 minutes, we will have a clearer idea here, okay? Now, as long as this continues to hold and price doesn't close below it, then I'll continue to look for longs here. All right. I'd want to see the daily pull back, give us some kind of buying opportunities. All right. And then listen to absolutely just pump. But when we're here, if we close below it, no Aussie, no Yorkshire tea, mate, for me. I'm very much a Yorkshire tea lad. If we close below it, let's say that candle closes just as it is, then my expectation is for price to pull back a bit deeper. Maybe we retest this order block. Maybe we come down for this swing low, round about 62.3 or 62,291 here on BitGet. So for me, I've got a really clear plan. We hold this gap and we push higher. And fun enough, I believe I said exactly the same thing about the update on Ethereum, right? So over the weekend, don't overcomplicate things. Hold the 4-hour gap, move higher. Yeah. If we don't, then we look below. If we get the close below, then there's every chance that we're looking to move lower. Zach, that's the only one who provided these daily and weekly reports on Discord. Just on point. I love it. So no, not at all. I think one of the great things that we do over at the Bird Nest is that we've got a number of different traders covering a lot of different disciplines, all the way from algorithmic traders, fundamental analysts, swing traders, position traders. You've got Burb, who's very much kind of, an unbelievable kind of exponent and master at so many different types. So we want to bring that big, broad education environment. So what you typically find is certain people's analysis speaks a little bit more to you than others, but it's quite good to have that broad spectrum. But then when things really start to make sense to you, say it's my streams, it might actually be, it might be someone else's streams. You might really kind of feel like you connect with Just Pit and the way that he uses those kind of brilliant levels, breakouts and playing strength. Jay, who's just a master of a very, very similar thing. Razoon, who uses a lot more about the TPO and volume profiling. When you find that thing that really clicks with you, find those people and really dive deep in it. So, you're not kind of spreading yourself too thin. Better to focus on being a master of your niche, right? And then surrounding yourself with the very best people than it is to try and do everything very broad, but very shallow. Okay, so my little preachy bit out of the way. I know that wasn't necessarily what you were pointing at there, mate, but I really do appreciate the feedback. Thank you so much. Now let me see actually if I can find this for you, which I can, right? So take a very quick look here at the post that I updated here. Yeah, so this was out on the 5th, which was Saturday, I think, was it? Yeah, 5th, 6th, 7th. So 1:37 p.m. ETH, don't overthink it. Hold the H4 gap and look higher, close below and look lower. Liquidity resting below, above old highs, and below old lows, all right? And this is the chart. So we can see on here, right? Look, that's the 4-hour gap. We set this order block. Price respect is closed above it, confirming that. Close of this candle here did a couple of different things. It actually inverted this gap here, right? It isn't drawn on between that wick and that wick, showing strength to move higher. But then, you don't really want to buy when there's euphoria or when everybody else is getting in, because price just scoops up. A lot of different reasons. You get slippage. It's just not technically a good time to buy. You want to buy when there's blood in the water, right? Same way that you want to sell when there's too much euphoria. So we're confident we're going up here. We now have an order block to target. We also have this beautiful gap that's emerged, and we're saying simple, hold this gap. We got an immediate target here, so we want to be long from down here, adjust our stops from here. Even if we come back to this area, as long as we hold it, that's the key. We wait. We're buyers here. We're sellers if we close below it down to this wick. All right. So that's just to give you a little bit of insight as to, you don't need to really kind of overcomplicate things. Yeah, you can find a way. I love making it as simple as possible. Life is complicated enough. So as I'm looking at these, I want to clear all these charts up and say to myself, well, all right, what are my conditions for today? All well and good saying like, oh yeah, it's this, it's that, blah, blah, blah. You're sitting there rightfully so going like, okay, BC, that's fine, mate. But like, what's the playbook? How do we look at this? Well, quite simply at the moment, we're kind of in a state of indecision. We've drawn up into this big H4 gap, but we're bullish overall. And I'm very, very much somebody that respects market structure here. Now, we have this smaller order block here. And again, with order blocks, a little bit open to interpretation. People draw them different ways. Some people include all the wicks. For me, the way that I've done it or refined it over the years is bullish order blocks are obviously bearish candles, so they might be red on your chart. In which case, if they're adjoining, I allow for the adjoining candles. If these candles are within the range of larger adjoining candles, then I always refer to the master set, as I would call it, right? So take the top line of that, draw it across. A close above activates this area. Okay, it shows me this is the buyers have stepped in here. It's pumped price. Any retest of this area is an opportunity to buy. Now, we've obviously got this very small down close candle here as well, right? And price closed above it here, giving us an indication that price was moving higher. Now look what happened. Price came down, we got the perfect retest, and then we got that pump. Now I've not got a problem with price revisiting these areas here. What I don't particularly want to see is price closing below this. And it currently looks like it's going to, but we never ever want to think. We just want to wait, be patient and see what happens, okay? Because there's a lot of times that these things can happen. And let me see if I find you an example. And you get this really long downside wick going into a gap, and people think, oh, it's over, price is going down here. And, this isn't the best example, but it is one nonetheless. We have a very, basically take that line left and you can see the other engagements with that level. Do you want to, sorry, which line do you mean, Craigie boy? The support and resistance line or the order block? But we basically have this very, very thin gap here, right? And it is very thin. However, look at what happened here. This candle for most of its time looked like it was about to absolutely obliterate this gap and just keep going down to this low. But when you wait to the close, you notice you get that move lower, price recovers, closes above it comfortably. That's why it's very, very important to watch these gaps. So this is what I'm looking for. As long as this holds, my expectation is for price to continue to move higher, right? So I'd be looking at this level up here, which is at 63.962. So this one for the order block. Yeah, exactly. You've got a really nice support resistance level here as well. So this is what Craig's going on about here. Now, for me, trading is all about confluence. Now, if I was going to draw this as an SR level, I'd want to be getting as many touch points as I could. Now, I do these with lines, right? But technically, probably a little bit more accurate with boxes. If I was looking at doing this with a line, I would draw one of these in. Let me do it in a color that stands out for you guys and do it a bit thicker as well. So I'm looking for maximum touch points here. And I also want to focus on recency. So as I'm looking here, I've got a lot of data, resistance, support, right? Price again comes kind of into this level. And that's because they are very rarely, actual fixed lines. They're more like areas like that between these two, for example. However, you want to get this as pinpoint as you can. Nobody, I think, teaches that better than probably Dante. who I was very fortunate to learn that from, years ago, and also SC, right? Just absolute masters when it comes to levels, and they're so important because you need to know whether you're favouring being a buyer here or a seller. Right here, you want to favour being a seller. You don't want to be buying into this, but when you see this expansion, you see price failing to get down below this level, getting all that absorption, then you know, okay, you're a buyer to where? Well, key liquidity, which was this, and then also another support and resistance level here, which was resistance. Okay, and this was taken from the higher time frames, right, from the weekly and the daily charts. So I think that's a really nice SR level there. I think, like Craig just alluded to as well, you want to be looking at this for confluence as well, right? So you want to be saying, okay, well, if I'm zooming in here, what else gives me confidence with the confluence, right? Not to overcomplicate this, but the fact that we have a strong expansion, price closes above this level, we set this order block. Like Craig said, if we draw that back, you can see how that engages with price in itself. That's because you want to look at these. It's almost like an area of mitigation. Yeah. So, terms of mitigation, what do they mean? I'm normally talking about them in terms of prior consolidations, right? So, for example, this here, was the real kind of, this was the down move here, or even if you looked at this down move here, that was the move that really kind of led to this big pump. That was the consolidation. Everything started to get in from there. Now, you might consider that this one is more relevant because it's more recent. That was the down move before this big expansion price came up. So let's use that as an example. What have we got here? We're going to do it in bright green so it stands out. This is the big expansion. We flipped a resistance level to support. Buyers are in this down move before price pumps. So we're buyers again here, 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 and here. Then what happens? Price closes below this level. We lose this. So then we look lower for the next point of liquidity. Now, the key thing here is then when we look across further to how it interacts, you see these as like a lighter purple. This is where the buyers were here. If we get any bearish breakdowns in this same area and this area gets disrespected, it's the same as a support and resistance flip. This area should be supporting price. Why? Well, I mean, here, right? Here, even this initial move here. Then when we saw this breakdown here, when price came up and engaged with this gap, then we see, okay, this big bearish move through it. Look at all these long downside wicks here showing absorption. We get that here and then you get it give out. Okay, so then when we get back to an area like this, it's really key to see what price is doing again, because it gives us the opportunity of insight. Now we can see that we're holding a support level here, but we can see we're drawn into this larger bearish gap, meaning that we're expecting some kind of corrective move here until we close above it, in which case we look to the swing high and then the gaps that are higher up. So what does it mean for now? Well, it just means that if the buyers were in here before and we lost this area before, it's kind of like a key or at least a relevant pivot point in the market. So we want to see areas like this hold. This bullish move that closed above a support level and gave us a bullish gap. That's in this area of mitigation, right? It means that we can be buyers here and push higher, which is why for me, it becomes so very important that, for continuation here in the short term, we hold this gap. Now we've got 25 minutes to wait to find out if we do. Okay, so what we're going to do is we're going to drop down to a lower time frame. We're actually going to move on to the hourly, just to see, okay, what's going on in the hourly? Does it give us any more context? And actually, we don't really get a lot here because the H4 gap overlays the hourly gap as well. We can see here, however, that on this time frame, what we have had is a structural breakdown. So we've come down, say higher low. Yeah, so higher low from this move up, higher high, higher low, lower high. We've now taken out that lower high here, and price is now correcting deeper. Now, you need to be very, very careful on which timeframes you're using so that you don't get analysis paralysis, right? You can't be using every single time frame because it will kind of tell you different things. Now, I will use an hourly for context if I don't have the context on the 4 hour. Context on the 4 hour for me here is super, super clear. We have a big bullish gap. If this is something you ever want to apply and you get yourself confused with it, you can do something like this. Do your bearish gaps in red, your bullish gaps in green. And then when you go onto the chart, you realize you're like, okay, we're in the mode of a larger bearish gap here. But actually, do you know what? I'm moving that back to gray because we know as we look on here this wick rebalanced this gap. Yes, this whole area might be rejecting price, but I want to refine that now because this gap has been rebalanced. So this one here is still active, and we've got 23 minutes that we want to see price on a 4-hour scale come and close back within here. Price closes back within here. My exact playbook for the day will be, first of all, to wait for the start of the New York pre-market session, which my time is 1:30. So your time will be 12:30, or not your time, UTC, sorry, will be 12:30. And then quite simply, what I'm looking for is this. Yeah, so let me give you the 12:30 line here. And you don't have to use this method, right? Just one that I use. Just typically when the highest periods of volatility and volume come into the market is when they align themselves with the US Open, right? And your pre-market starts at 8:30 their time, and then we have the actual open at 9:30, which is then 2:30 UK time, 1:30 p.m. UTC. So I'm saying to myself, well, if that's the plan, I've got to play each way. If we get the 4-hour close below, then I think price is seeking liquidity lower down, right? However, we're holding this order block on the higher time frame, this black line. There's every chance that we react and reclimb back into here. So what would I like to see happen? I'd love to see these get taken. On the 15-minute, we have equal lows here, that low and that low. They offer a really key liquidity pool. So if I was talking dream scenario for my playbook today, it would be something like this, right? We come down, take out those equal lows, we get that move offside just after the pre-market open, then we recover this level, and then we look higher. Why would that make sense? Because we've taken a key liquidity pool, we've induced a lot of people to already start going short, meaning that we've developed a lot of liquidity up here above these highs. Then what we can do is catch those people offside, moving to our long positions here. And you can just be very, very simple with this, right? You look for a low to sweep, the high that swept that low, you want to see a big, powerful move beyond it. And then, you can be a buyer in and around here. And then look, you're just looking up from here and you're saying, okay, well, where can price stop? Well, if we're targeting highs and gaps, we can see that we've got some gaps up here. So we can get ourselves into a position. We know where we're wrong. We're wrong below this. Yeah, because that's the area where we know the stops are, because that's the recovery move. So if we're wrong on this, we're wrong, we get stopped out. But if we're right here, we typically have a really nice risk to reward, all right? Because we could be really coming up to take out these highs or higher still. But even if we're going to mitigate our risk here at these gaps, we've still got 2.5 hours in the bank. Then we can move the stops up and everything just becomes a lot more risk free or risk averse. But that's what I'd be looking for here. The opposite of this, if we do get the 4-hour close below, then I'm saying to myself, all right, well, where's the key liquidity targets here on the 4-hour? I got this 4-hour low, and it's a gap low as well. So we're just going to do that in red. Then when we move back to the 15-minute here, I'm saying to myself, right, well, let's say we've closed below this H4 now, and then it turns purple, or I turn it purple. Obviously, it doesn't do it by itself because it's turned from support. We expect price to find support here and move up. 4-hour close below it is a show of weakness. So then we look to see if we get a rejection here. If price then comes and closes back above it again on a 4-hour scale, we'll say we're wrong. It's shown strength again, and we can move higher. However, typically, if we get these inversions, it's a sign of weakness. So I'd be looking for the opposite here, actually. I'd still like to see price take out these equal lows, but what I'd really like is to see price then have a move higher to take that liquidity before moving down to the initial liquidity targets lower. Again, remember, it's kind of counterintuitive here, but you want to be a buyer when there's blood in the water, so you want to see those moves down to buyer, and then you want to be a seller when there's euphoria, or a seller when the market's pumping. Obviously, with the correct aligned bias, right? I've got the bias here from the 4-hour, which is telling me that if we close below here, we're probably correcting deeper. Look, I'm not expecting this thing to go to 0 or even to the higher time frame equal lows down here. Do I want it to? Well, if I'm in the short trade, then absolutely. But do I expect it to, or will I base my entire trade on that and my entire risk? No. I just need to get from here. Yeah. So we get a good buying opportunity. Price comes out. We get that here. So we're sellers, here. We know where we're wrong. We just want to target those initial levels, mitigate risk by moving our stop losses up, and then we can start targeting lower, right? And who knows? Maybe we go here. That's not for me to decide. But ultimately, what I want to do every day is I want to be coming in with a playbook that allows me to trade the markets both ways as an intraday trader. Okay, and that all comes down to getting this information off of the higher time frames. So that was a lot of talk, I know, guys, right? But just really trying to give you context inside of my thinking. So while we hold this gap, yeah, then we're a little bit neutral. This gap is going to tell us a lot more. At the moment, it's bullish, and it looks like see how it's just having that resurgence, just starting to draw back up. 18 minutes left. If we close back within here, then I think this could still hold, right? Now, the only other thing that concerns me here a little bit is, measuring this gap out and putting just an equilibrium on it, just a Fibonacci with the 50%, all right, the 0, the 1, and the 50% in the middle. Normally with these gaps, you don't want to see price closing too aggressively below the 50%. Can still be a sign of weakness, but remove the nuance, focus on the key elements. And again, look, like I said, you see how price is just trying to kind of climb its way back up in here. So as long as it holds that, I'm looking higher. However, closes below, and then very much looking for price to seek out liquidity targets lower down. All right. Absolute Yakuza Kano, my friend. How the devil are you? Brilliant to see you on here. And you know what, mate? That's so funny. I don't want to big myself up here, maybe don't include myself in this, but we have a saying in England that great minds think alike, and I'm absolutely about to fly this over onto ETH so we can look and do a follow-up on what I just showed you guys on the on my Twitter post from Saturday, right? Exactly the same principles. Let's see how they played out, how we could have been buyers, how we were getting ourselves into long positions off the back of that, then how we mitigated that risk, overlay that and say, right, what's our approach to that today as well. And just very quickly again, really would like to just do a big shout out to our partners over at BitGet. Really wonderful trading community people. And look, for example, as an intraday trader, one of the things that matters the most to me and the community of traders that I take care of over at the Bird Nest is that we need low trading fees. I typically, I've got a big history with trading the NASDAQ, indices, Forex markets, where actually you buy contracts very cheap there, when in crypto it's very expensive for the same amount, because we're trading on low time frames, right? So looking to capitalize on small percentage moves. So that comes at a cost. Now, if I've got trading fees of like 0.1% and I've got $100,000 position size, then, my fees on that, doesn't take a genius to work it out, are going to be pretty expensive. Now, if I've got an exchange like BitGet, for example, who are working with me to not just look, it's different with my trading volume, and professional traders are in the same boat. We're very attracted to these exchanges, so we get very good fees in reward. You can get them as well. You look at the VIP tiers and systems that they have. The more trading volume you put on there, the more that you trade, the more that you put on, the better fees you get, which is brilliant. And I do agree with that. However, these guys are working with me so that everybody that trades with me over at the Bird Nest, if we're all on the same link, they will get access to the same fees that I get, right? So, they're very low fees, and that makes day trading that much more, makes that much more sense from a risk perspective, right? Anyway, do go and check them out. You can find the link down in the description. If you reach out to anyone there or do have conversations with them, they're a wonderful team, very receptive. Do please tell them that BC says hi. Now, over on to ETH. In fact, give me 1 second, guys. Let me just slurp down a little bit of tea. I'll save you the noises. Awesome, mate. What an absolute legend. And guys, you're very welcome. Love the feedback on that show. We've got almost 3,000 people live with us at the moment just through YouTube. That doesn't include people that will be going in through Twitter, people that are coming in through Instagram, etc. So appreciate every single one of you. Right, so before I rattle on any more, let's take a look at ETH. So actually, do you know what? Let's look at the... Let's show you on here, right? The exact chart that we use. So again, this is a beautifully clean support and resistance level here. So whenever I see these long or these abnormal long kind of downside wicks, right, we get another one here, which I'll show you an example of in a second. And I really like looking at those and kind of saying like, oh, okay, maybe there's a key kind of pivot point there, right? A key area that obviously there was really strong buying stepping in here. Yes, we saw that pump. Well, what happens when we lose this level? Deviation, okay, price gets back above, see the retest, price pumps. People say, oh, price didn't really pump there. Well, you don't need these things to go to the moon. Price was just merely moving to the next pool of liquidity, which is a gap higher, right? That's a higher sat within this bearish gap. Look how well both of those things did their job at rejecting price. Then, again, I know I sound like a broken record, but what do? We look for support to fail. We look for this bullish gap here. See how it closes below? Exactly what we're looking for at the moment on BTC as well. When it closes below, we say to ourselves, okay, that's weakness here. That's now inverted. So classic support resistance flip. Support here, closes below, then becomes resistance. Look, as it's retested. And then we quite simply just find the next liquidity. Now from here, the expectation is for price to draw up, find this gap and sell off. Lo and behold, what do we get down here? We get another inversion, a bearish gap that then turns bullish. Look at how this forms the base of support, for price to then, move higher to find those bids. Anyway, not exactly what I'm here to do, but I just thought it's a really, really good example because of what we're currently looking for, all right? Then as price gets back underneath this level, we can see what happens. Closes below again, retest, price can't close above, sells off. Rejection. What happens? It closes above, find support, sneaky move. But this is like, this is a deviation then. No one says that better than SZ. Anytime I think that, it's always his voice in my head. Deviation, as he used to do on his old charts, and then what happens? We get back below and price sells off. Again, just targeting liquidity, resting lower, right? It doesn't need to be more complex than that. Then when we come back here with sellers here, close back above it, and then price really starts to fly. So key support resistance level. And again, you can do the same. If you look at these kind of abnormal wicks, you look across here and you say, okay, resistance here, price below, resistance, strong close above support, closes higher. What's this? Hear the great words of the man himself. Deviation, price gets back above, supports at this order block area here, this consolidation that then just leads to this nice pump higher, okay? So again, we can make life as simple or as complicated as we can for ourselves almost, but I digress. Then when we come to interact with this again, all part of this analysis, you can see the video actually, guys, it is there. There was the short post update as well, but I did like a short 2-minute video on this as well. And again, remember, like I said, we're looking to just hold this area here, yeah? Hold this. We got this move. We held this level. Order block held. Gap held. Support resistance level held, as this case as support. And like I said, this was the dotted line we looked at from the YouTube post, from the Twitter post, sorry. Price found that initial reaction. I then said, remember, same principles again, right? Exactly the same principles again. We then look down for the gaps. We say, okay, well, how do we know if price is going to continue higher? We don't. We never do. We can have as much conviction as we want, but people tell you that they know are talking out of their backside, sadly. We never know. What we can do is we can overlay a set of time and data tested strategies to say, look, once we get here, I'm just going to favor being a buyer here unless we close below. Yeah. And we didn't. And actually, this is the best example, or one of them, from what I was talking about earlier, how most of this move down would have had you think that we were going to Hades down here, right? But you have to wait for the close. Price ultimately then found this gap as well, drew down into this order block, just as we were looking at the black line from this one, right? Had a beautiful drawdown into this. Just enough to hold both of these gaps, tag the order block, catch enough people offside that have started to short this, and then pop in a way that you see that big aggressive move higher. Now what we can see here with ETH on the 4-hour, we will check this across with Bitcoin as well. Let's just change this one across onto here. While Bitcoin's kind of fighting a little bit here, right, to reclaim this, to hold, this 4-hour gap. We've got 9 minutes now. We can see here with the same gap that ETH is holding this quite comfortably. Now, don't get me wrong. It's one of those things, right? Because if BTC starts to tank, then, maybe this gap doesn't, hold here, right? But let's see. Right at the moment, this is looking like a better reaction in here. And just to put some context on that, as we now drop to the 15-minute. Remember what we said before, you're just looking for these reasons, right? You're looking for these areas of confluence. What's price engaging with here? Well, we've got a 15-minute order block in here, right? Or actually, we have an even bigger 15-minute order block here. All of these consecutive down close candles, that will be like, an hourly or higher time frame order block, right? So you can see all of a sudden, okay, what happened here? Rejection, price closed above, Now we're finding the buyers. Well, we're holding the 4-hour gap. Yeah, so this is the area here that you want to be a buyer. I won't bore you into it too much or whatever, but look, you wait for these kind of moves lower, this inducement, you can see that you've swept liquidity from these lows here. Then I want to see the high that was responsible for that sweep, which is here. And then I used to teach this. You still see it's on here, right? The breaker line, right? Obviously breaker candle would be here, the up close candle before price sells off. You then look for that big, strong close above. And ultimately you can play these things very, very risk averse, right? So you've set the order block, you can put your stop loss under the order block candle. You can even look to mitigate risk here if you want. You've got decent percentages in here. Yes, this is day trading strategy, right? You can just apply this to the higher time frames as well, even when you're really uncertain. And it would be a little bit risky to take this because you'd want to see Bitcoin showing some similar strength here as well. But that's basically how you can kind of get into these positions and make sure that you get a chunk of it. And you do the same, but just with the higher time frames, right? So if you're looking for example to look at an hourly time frame, right, then I would do, I'd be looking at, say, like a daily, right? And I'd be looking for the daily for the gaps, the daily's the area of support, and then using that hourly to refine, like I do here with the 15. However, the really kind of long and short of this at the moment is that was the target here, was this initial high. Price has come in, had that nice move here, decent strong close above it. Now, don't get me wrong, we do have a long upside wick here. And then we created this gap. So quite simply, look at what we've done so far coming up. We shifted structure here. Yeah, so lower low, lower high, lower low, lower high, lower low, higher high. So this is our shifting structure here. We've now broken structure getting above this because we come from a higher low. So what do? We attack the high, found support of the bullish gap. Price moves up. What do? Took the high over here, right? We've now had a corrective move down. What do we do here? Held this bullish gap here. Okay, price then moves away. What have we done here? Now we've taken the next high. So what do we look for here? We look for the gap to be respected and hold. It held. We've now moved up and taken this high. So this is the gap that we now want to see hold. We apply the same methodology with our order blocks. Okay, so if, for example, let me just clear some of this up. If, for example, you're looking across here and we're saying, all right, well, there's this order block here, the down close candles. You want to see that respected. What do we have here? The same thing. They're the down close candles that we want to see respected. Just get rid of this for a moment. Yeah, so down close candles, price closes above, order blocks hold, push price higher. Where are we now? Well, now we're with these down close candles, right, on the 4 hour. So they've been respected and they're holding, right? So now we're saying, okay, well, again, we've got this confluence. So just remember, when you're wherever, let's pick a random point on the chart, right? Let's look at this. And let's just zoom in. So when you're in an uptrend, what you want to see is you want to see the down close candles, your red candles, which typically red candles with people, being respected. Price closes above, holds, and pushes up for further liquidity, taking out liquidity above these highs, drawing into this order block. Now, when you see your structure shift, so from here, for me, I would consider that the initial shift here. And then I'm looking at this here and saying, okay, this is where we actually break structure, higher high, low, lower high, and then we take out this low. On the way up, I want to see the black candles supporting price, or your red candles, however you have them, yeah? So do the black candles support price here? They absolutely do. Top of the black candle, price moves up. Does this first black candle down here support price as well? Absolutely. Price moves up, retests, move up, retest. Now, we didn't get a retest of that, but price expands higher and then holds this area. We then set this black candle here. Price, again, look, closes above, retests it, holds. So look, support, 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 support. What happens then is we look at one of these areas that offers support. I'm going to draw this in as a box so we really kind of see the overlay. Yeah, so this was the area we were discussing, right? So that was an order block here. Price comes and closes above, retests this and pushes higher. You've made it to your initial liquidity targets. Happy days. Price breaks down. Maybe you don't get the trade that you want, but what do you get? You get an incredible amount of information. So Remember, we're using the down close candles, the black candles or the red candles, whatever they are on your chart, but the bearish candles, we want to see them supporting price, yeah? Top of that, price closes above. When it closes above, it validates it. This area holds. When we're bearish, we want to see the white candles do the same. So white candle here, price closes below, we look for this area to reject. Now, this is the real key one for me, is when we get down below this, and look how well price closes here, then look how the wicks just can't get back above it. Now, remember, and this is where I'm kind of bringing everything together here, so hopefully this is useful for people. You know, again, not saying this to be arrogant, please do learn and do whatever you want. It's not up to me, but you know, this is something that when I really started refining this with SC many years ago, when we were doing these things like meta trading, right? This really helped me, because then he was saying you get this reversal point here. This area, these prior consolidation, these order blocks, whatever you want to call them, supply, demand, etc. But these down close candles here that led to this pump. Remember I said to you earlier, we covered the idea of mitigation. So as you see these brighter purple bits come across on my charts, now, if this is a bullish area, if the buyers were here before, what I don't expect to see here is this bearish gap. A bearish gap created within this area of mitigation gives me extra confidence that price is now too weak. Now, that's because if the buyers were here before, when the price comes back to this and we lose this level, not everybody has a hard stop. What they'll do is wait for this reversion to come back towards where the stop loss is and mitigate, flip position, yeah? And then that's often when you get these larger sell-offs. So here, it was really, really key. And then, like I said, what do we look for here? We just look for the white candles, yeah, to suppress price. The price comes down, sets this white candle, sells off, retested here, it keeps going lower. Obviously, we have other white candles in here as well. You can see the immediate suppression here. That white candle, price rejects here, moves lower. Another white candle here. But then this one gives us the indication when we change the state of delivery here. Notice how we're not kind of closing above the black candles until we get to here. Then all of a sudden, like where we flipped here, we're then the other way. That black candle then gets down closed candles, closed above, retest. So we look higher, yeah? And basically price, you know, it's never 100% accurate. Nothing is. But that's the kind of way that we can work out to a decent degree these market dynamics. Right now, it really, really helps if we're buyers within these key areas, and we can see here what a lovely reaction that ETH is having. Yeah. So as we said earlier, buyers in the right spot gives you that opportunity, because if you're wrong here, you've probably already mitigated your risk, right? Meaning you can move your stops up, etc. So expecting the bid to come in here, I have to say about 30 minutes early for my liking. I was really hoping we would get something like this at the New York Open. But again, look what we said about Bitcoin, right? Very, very simple. Sometimes it's just about having that patience. We've got our downside targets marked up. We've got our upside targets. But remember what we said, as long as we hold this 4-hour gap and we're holding this order block, remember, black candles supporting price higher. Yeah, so look where we get the support here from this one. We get support here from this one. And price ultimately moves up. So now we're still holding this, and we've got 46 seconds left to go before we close off the stream. We can see now, look, price aggressively working to make sure it closes back in this gap. That for me is really, really bullish. I'm super happy with that. If price breaks down from here and starts going to Hades, then I'm wrong. It's as simple as that. But I'm either stopped out of the position, I have, you know, limited risk. If we close back below it, then I'm pretty certain price at that point is heading lower. So it just helps me refine that bias. And then the loss that I take, or maybe the amount of winnings that I get is smaller than I thought it would. That's the tax I'm paying the market, so that the market can tell me or give me a solid indication of exactly where it's heading. So now what I'd like to see here are a couple of things. If you want to trade this even more kind of risk averse, we've had this kind of initial, or a couple of them actually, 15-minute inversions. We've had this one here, and we've also had the one below it. All right, so now we've set that 4-hour candle, and we'll just show that on here. That 4-hour candle, I love that downside wick, drew into the order block. Buyers really kind of stepped in here. But just for extra confluence, I'm looking at this big expansion here, and what I'd really like to do is wait. Yeah, I want to see these hold first of all, because if these really are areas that should have rejected price we've now closed above, I've got a couple of things to go on here. Yeah, so I've got this down close candle here acting as the order block, the 15-minute order block. And then I've got these two areas to hold here. So I want to see price pull back, but I want to see these areas hold. Let me get rid of those for a moment. because the next thing I'm really interested in here is in 14 minutes when this candle closes. If we leave a bullish gap here, then all of a sudden, look at the confluence. Bullish order block, reaction at a higher time frame order block, holding a key level, holding a 4-hour bullish gap, right? Then if we create a 15-minute gap, for me, this just looks too good for price to come down into this gap and then rip from here. Close below this here back within the order block can be an early indication that, you know, the TA that we've done might not be playing out, in which case we just sit on the sidelines and then we have a little wait. All right, legends, look, I've got to run, unfortunately. Would love to stay here with you all day. Thank you so much. One of our highest viewing numbers that we've had in recent times. I think currently about 3,200 of you live with us just through YouTube. So just want to say a big thank you. Appreciate each and every one of you. Please do remember to take a look in the description below. Please do make sure to come along and look. Let me just show you these because I'm so proud of these. You know, I came to the nest, excuse me, as a relatively, well, as an inexperienced trader in crypto, but also in the worlds of social media and that, right? You know, I built my career pretty much most of it at the nest. They took a punt on me a few years ago. Adrian himself, you know, promoted me to be head of the trading team there. And while I consider all my colleagues over there as equals, it's still probably the biggest, you know, career highlight for me was doing that. And look, you know, it's all paying off. You know, our whole lives and work go into making this happen for our members. So you look at it, total R profit in September, 48.37. That's if you had a 10K account with 2% risk. Yeah, you would have left with almost $10,000 profit. Right, that's mental. That's just in September. If you had $1,000 account with 2%, you'd had $940 odd in profit, right? So just look, all I'm saying is go along, check it out. There's offers in the description. Come along, be part of it. Happy members, happy traders. Everybody's making money together. But our real focus for you and for everybody that comes to us there is to focus on the learning, on the education experience, right? Come and copy the trading team's calls. We've got no problem with that. We want to see you all making money. But make sure you're using the time that you have around that to learn, right? You want to always be in control of your own destiny. And please don't also forget to come along and check out our awesome partners over at BitGet. All right, legends, thank you so much for your time today. As always, wishing you very, very well. If you get opportunity to come along and take one of the memberships, or if you're already a member, I will see you on our live trading show tomorrow, Tuesday, Wednesday, Thursday, every week. You come and trade live with me. I show you the setups I'm taking, the positions, how I'm sizing them, all the TA I've done on the market, and we will scalp some intraday charts together. All right. Thank you so much, everyone. Honestly, would love to thank all of you individually, with so many of you there. With your thanks, your gratitude, and any feedback at all is always welcome. Remember, you can find everything about us in the description. You can also find me on Twitter at BC_Richfield. Have a fantastic week, everyone. And I look forward to seeing you again for the live show on Wednesday, or if not, and ideally, I'll see you around the nest.